Zach's Screen of the Week, an overview of a timely stock screening strategy aimed at helping you produce more profitable investing results. This time around, we have a screen for earnings season. Screen, study, there's a lot to it. So let's bring in our top stock screener here, Kevin Matris, and he'll fill us in on all the details. It is a screen, right?
Yeah.
Combined with a study that you're going to talk about?
Yeah, they both begin with that, so there's the unifying theme.
Right.
But no, I wanted to talk about earnings season because the next earnings season literally begins next week. It begins on July 8th.
Yeah.
So given the market's spectacular rise so far, I think as of the close of business yesterday, which was Monday, I think we were up like 13.3%. But also given the unfortunate pullback from the highs, I think we were down as much as 7.5% from the highs at its worst. This earnings season is shaping up to be a very, very important earnings season. A lot of people have a lot riding on it. So what I wanted to do was, getting ready for this upcoming earnings season, I wanted to take a look at the past earnings seasons to see if, any of this recent history has any kind of clues or foreshadowing for what we can expect this time around.
Okay. And it's for that reason that we should be excited about this earnings season, right?
Yeah, when I ended up doing this study, which I'm going to share with you guys, everybody, in just a bit, I realized that this is something that everybody should be really excited about. But very simply, next week begins earnings season, and earnings season always officially kicks off with Alcoa. They're going to be reporting after the close. And, it's interesting that Alcoa is the official start to earnings season because Alcoa is far from a market barometer, right? As a matter of fact, a lot of people dismiss Alcoa's earnings as being largely irrelevant. But they've been synonymous with the beginning of earnings season because they are the first blue chip stock in the Dow.
Right.
To report earnings. It's always been that way. This tradition has stuck, so here we are. But anyways, they report on Monday, and then the fanfare for the rest of the season will begin.
Okay. So tell us more about this earnings season study.
Yeah, so a lot of times when people look at earnings season, they will take a look at the expected earnings for the S&P, and then they will take a look at what the aggregate earnings actually looked like afterwards. And that's all fine and dandy, but what you're really caring about is how the market performs. So I looked at this study a little bit differently. So first off, let me just say, when I did this study, I ended up looking at the last 4+ years. So I went all the way back to 2009 for when the bull market began. Now, there is a bit of a bias in this study because really the last 4+ years the market has been going up. But this is the environment we still find ourselves in, so it's very apropos.
So what are we talking about, 17 earnings seasons?
Yeah, so we went all the way back to the beginning of the bull market, which was really the beginning of 2009. We have 17+ earnings seasons, and the way we calculated the beginning and the end of the earnings season was by looking at Alcoa's report each and every earnings season, and then we took a look at how the stocks performed over the next 5 weeks. The reason why we picked 5 weeks is because that largely coincides with the unofficial end of earnings season, which happens to be Hewlett-Packard's earnings, because they are the last of the blue chip companies in the Dow Jones to report. But there were a lot of interesting statistics, and I'm going to share those with you right now.
Yes.
So, over the last 17 earnings season, the median return for the S&P was 3.82%.
Okay.
12 out of 17, or 71% of the periods, were winners. The largest winning period was 14.35%, while the worst losing period was minus 8.72%. The most recently completed earnings season saw the market gain 4.52%, and that was the one that we just completed last quarter. And the study showed that there is a greater chance of having a positive earnings season if the last earnings season was positive as well. So again, with the last earnings season being up 4.52%, you already know that statistically speaking, there is a high probability that you're going to see another positive earnings season this time around.
Okay.
But these were very interesting stats, and what I then did was I wanted to expand my study a little bit more. So here's the expanded stats.
Okay.
What I found was I wanted to take a look at what would happen in the 30 days after the complete of the official earnings season. So that is what the expanded study included. So these stats are showing this. The median return for the S&P in the 30 days following the official end of the earnings season was 2.22%. 10 out of 17, or 59% of those periods, were winners. The largest winning period was 6.48%, while the worst losing period was minus 5.66%. And the most recently completed 30-day post-earnings period was off 1.3%. Now, the being off 1.3%, that was the one that we just came off of. That, also was part of that big sell-off we had seen once Bernanke was talking about accelerating the taper. But nonetheless, those are the stats. We were off 1.3% in the 30 days following the most recent earnings season. But anyways, 8 out of 12, or 67% of the periods where the earnings season was positive, the following 30 days were positive as well. So once again, since the last earnings season was positive, I'm expecting to see another positive earnings season. And if we do see a positive earnings season, you can also anticipate another 30 days of profits as well. But just notice that if the earnings season was negative, then there is a greater likelihood that the post-earnings season period will be negative as well. But these are some fascinating statistics, and all of these statistics lead me to believe that we have something to get excited about beginning next week.
All right, so the takeaway here is that there have been more profitable earnings seasons than not.
Yeah, the bull market is still intact, right? We did see a pullback, but it's going to take more than just 1 month of crummy price performance to kill one of the best bull markets we've seen in recent memory. If you take a look at the economy is doing fine. Granted, you take a look at some of the recent economic reports, and you can wish that things were growing quicker. But we have been growing fast enough, and it's been enough to increase jobs. It's been enough to generate record corporate profits, and we are still muddling through with, right around a 2% growth rate. And that has been enough for some spectacular gains in the stock market. So, yeah, I think that's the takeaway, and that's why I'm looking forward to next week.
All right, well, set this screen up for us.
Yeah, so this is a pretty simple screen, and what I'm trying to do with this one is, knowing that earnings season's coming up, you want to try to find the companies that are going to have the highest probability of surprising. So I just have some basic parameters in here, but they're all very relevant and all very important. So the screen first starts off with companies that have a Zacks rank of less than or equals to 2, which means I want companies with a strong buy or a buy. We already know how successful the Zacks rank is. This is going to help you put winners onto your radar screen.
Okay.
The next one is I want the last EPS surprise to be greater than 0. We've talked about this before, and very simply, companies that have posted a positive surprise in the past have a tendency of surprising again in the future. So I'm looking at companies that have shown a positive surprise. That's going to give me another probability this time around. I want the last sales surprise to be greater than 0 as well. So again, I don't want to see only bottom line outperformance. I want to make sure that you're seeing top line growth, and growth that's even better than what analysts are looking at. And then this last item ties into everything. So I want the net margin to be greater than the net margin from 1 quarter ago. So seeing a company earn more for every $1 of sales that's very good, and that increases the chance that they're going to be able to post another beat. So they've already figured out how to increase earnings. They're also really supercharging themselves on the top line sales, and if they're able to figure out how to make more money on each dollar of sales they make, you've got all of these perfect things in place for a company to be able to surprise.
All right, so using that criteria, what stocks did you get that came through?
There were a bunch of stocks, but it was a relatively narrow list. You know, sometimes these screens will give you 30, 40, 50 stocks. What I did with this one is I wanted to focus in on companies that met all of that criteria, but I also was looking at just really the next 2.5, 3 weeks. I wanted to find companies that were going to be reporting in the next 2.5, 3 weeks that met this criteria, and here's 5 of them, okay? I've got Asbury Auto Group. They report on July 23rd. I've got Cheesecake Factory. They report on July 24th. Then you have Icon. They report on July 22nd. NCR Corp, they're going to be reporting on the 19th. And then PNC Financial Services, they're going to be reporting on the 17th. All of these stocks are coming from different sectors and industries. But each one of these stocks, they've all posted positive surprise in the past, positive sales surprises. Their margins are on the rise. They've all been outperforming the market. And I think these are 5 excellent candidates that should be able to beat the market when they report in the next couple of weeks.
All right, own any?
No.
All right. Check out a text version of this week's screen, penned by Kevin's own hand, I might add. It goes along with this video at Zacks.com if you are watching this video in syndication. Get on over to Zacks.com. You can link right to it right off the homepage. And if you want to find out more about the Research Wizard, which is the tool that Kevin uses to achieve all of these screens, then Zacks.com/researchwizard is what you should type into your browser and hit enter, and it'll take you right to that information. With Kevin Matris on the Screen of the Week, I'm Terry Ruffalo.